Trading the markets can be a fantastic way of making extra money. Today, we're going to focus on trading Bitcoin. There's a nice short-term, long trade setup. Buy low, sell high. We're in the position already, but I'm going to show you some of the things you want to take into consideration to stack the odds in your favor. So if you like today's video, like, subscribe, hit the bell notification. Let's dive into Bitcoin. We are on a 1 hour chart with Bitcoin. Now you want to remember, markets are driven by fear and greed. Fives and threes. So the first thing we want to take into consideration is the trend. Is the trend up or is it down? So I've built something called the Trend Identifier Dashboard. It's like your executive assistant. Weekly trend is bullish. Daily trend is bullish. So we should consider buying. Really, really powerful. This helps us a lot. But it's not enough by itself. By the way, if you want to test out the Trend Identifier Dashboard, 30-day trial, £1. I'll give you some training and I'll show you how to do this. We'll talk about that in a bit more detail towards the end of this video. But what I want to really cover is stacking the odds in your favor by something called a confluence of events, where it's multiple things saying the same thing. So what do we have in our hands right now? So we've got the trend, we got a check, we've got pattern. Now, I can't emphasize this enough. You want to really ingrain this in your mind. Markets tend to move in fives and threes. And what I mean by that is we've recently had this five-way move to the downside. 1, 2, 3, 4, 5. And it's likely we're going to get at least a B, C correction. So this is what we're anticipating as the minimum. And there's some good profits to be made on just this move alone. So when we're looking at this, there's fives and threes on different degrees of wave counts. So I'm just going to keep it relatively straightforward here. We've got this move up. We've got what's called an A, B, C of a B. And the market is likely to continue to this range over here. Now, it doesn't mean it's guaranteed. So you need to have something also called risk management. Finding out how much are you willing to risk to find out if you're right, but also how to manage that risk, reduce that risk, lock in profits in a logical, mechanical, non-emotional way. Really, really important. So let's just talk about that now. So this looks like it was called an end of a wave B. We're anticipating the price to go above this zone over here. So what I ask myself, and what you should be asking yourself when you're taking a position, is what should the market not do if the trend is going to continue, right? What should the market not do? So when I'm looking at this, if this is in fact a wave B, especially now that the price has gone up here over here, the price should not go below this point over here. So your stop loss should be no lower than this point. Now, a stop loss is an insurance policy. It basically says, look, if the market goes below this point, I want out. I want out, I'll take a small loss, and then I'll reevaluate. Yeah, so it's stop loss, stop your losses. It's an insurance policy. But as the market starts to move in our direction, and I want to emphasize this. I'm going to just zoom in over here. So as the market starts to move in our direction, so I went long on a swing high, so we're early days over here. Now we've got a new swing low. The market's moved up. We had another A, B, C, remember, fives and threes on a macro, intermediate, but also on a minor scale as well. So, and as the market has now gone above this point over here, the market shouldn't go below this point here. So now I'm asking myself, what should the market not do if the trend is to continue? Now, the art and science of trading is we never know what's going to happen. What we can do is like a casino, stack the odds in our favor, and then play the game again and again and again consistently. That's going to be really, really important. So what we do is we then move our stop loss initially to this swing low, but now to this swing low. So what this does for us, this is so important because the first objective actually is not making profit. It should be long-term survival. In other words, risk management. Because what we've effectively done here is, let's just say you're risking 2% between this point, your entry, and your initial stop loss. So this represents 2% of your account. If you've got 10 grand in your account, you're risking $200. If you've got 100 grand in your account, you're risking $2,000. But by now, adjusting your stop loss in a logical, non-emotional, mechanical way, we've reduced our risk from 2% now to 1%. So we still have capital exposure at this point. But it means we are protecting ourselves from the downside. What I want to see next is that the trend continues to the upside. I would like to see this part over here get broken and then moving towards this part over here. And then as we get new swing lows, we will adjust our stop losses in a logical, mechanical way. But the most powerful thing, one of the reasons trend identification, especially if you're using a mechanical way of doing it, is that it doesn't require any thinking. So the way we identify the trend is something called the stochastics RSI, and we use 2 time frames. And I've simplified it by creating it into a dashboard. If you look over here, what it does automatically is it changes based on what the weekly momentum is doing and the daily momentum. And what I like to do is ideally have the daily and the weekly pointing in the same direction, and then the dashboard tells me, we've programmed it this way, consider buying. Now I've used the word consider because the momentum is just the first checkbox. Then we want to look at pattern. We also want to look at price ratios. We also want to look at time ratios as well, which can be really, really powerful. So if you want to check out the Trend Identifier dashboard, it's £1 for a 30-day trial. You'll love it. It's £9.97 thereafter. We made it the cheapest ships. There's a lot in this, and you'll get a lot of training on how to use it, how to maximize it. It's a really, really powerful tool. So what do you think with Bitcoin? In fact, let me just tell you this. With Bitcoin, what I'm anticipating, just so we're all on the same page, is some type of wave 1, 2, some type of 3, 4, 5. And in this region, depending on how it's all unfolding, we might then get a continuation to the downside. But we don't need to concern ourselves with that at the moment. All we know is right now, the money is on the upside. The probability is on the upside. So I'm looking to make money here, ideally here. And if it does reach this zone over here, we'll reevaluate to see what is the momentum doing, what is the pattern position, what is the price position. And then like any business, we will then need to make business decisions based on what we consider is going to happen next. So if you like today's video, like, subscribe, hit the bell notification. We'll keep a very close eye on Bitcoin. Really, really important. Let's finish with a quote. We're going to go with chapter 2 today from my book. I started with chapter of a quote. By the way, you can download my book for free as well. It's in the link below. Some really good gems in there, especially when it comes to mindset. Rule number 1, never lose money. Rule number 2, never forget rule number 1. That's Warren Buffett. Now, when it comes to the art and science of trading, taking a loss is just the cost of doing business when it comes to trading. However, we want to be able to manage our risk, know what is acceptable capital exposure. So you're risking 1%, 2%, 3% per trade. That's important. So you have that in your business plan and in your trade plan. And then when it's logical to reduce your risk, then move it to break even and then lock in some profits, we want to be able to do that in a nice, consistent manner where you can do it consistently time and time again.